The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 18th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we're going to go look at the circumstances of what the bulls and the bears, the buyers and the sellers, are communicating to you and I, and I am absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. You can send me an email, steve@tfnn.com. You can ping me inside our Tiger's Den. Communicate any way that works for you. Folks, this is fabulous Friday. Of course, we're all getting ready for the weekend. Of course, it's the Hotel California, sponsored by Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 209 points at 16,466. S&P off 21 points at 1969. NASDAQ Composite off 39 points. Russell's down 10. DAX closed down 313 points. The FTSE closed down 82. Gold's up about 20 bucks and change, trading at 11.37. Silver up 21 pennies. Light sweet crude back $1.33 right now, trading at 45.57. Unless I've got the wrong contract up, we'll have to take a look at that. Natural gas back just a tad. I'll lead the charge to the upside. You've got LinkedIn, interesting, up 3%, up $6. You've got Amazon up $5. Just looking for some other names out there to the downside. You've got Priceline down $13. Biogen off 8. AutoZone down 7. Google's off $6. We'll go see what kind. Goldman Sachs off $5. We'll go see if there's any volume behind those moves. But where do we begin? Let's begin. Let's go medium-sized picture. Then let's go really dive down in under the covers. Then maybe we'll go to a larger-sized picture just to see exactly where we're at. So when we take a look at the daily picture, let's start off and take a look at our price oscillator. So we've seen some decent price damage, right, between yesterday's move higher after the Fed and the pullback. Right now, it's just 8 Dow's off 208, S&P 21, composite down 39. But if we take a look at our price oscillators out here, for the New York Stock Exchange, by the way, declining issues outpacing advancing issues by less than 2 to 1 out here. So we've seen some decent price erosion, but as far as trouble underneath the covers, it's not there. It is not there in the New York Stock Exchange. A little bit of a gap down, not that big of a deal out here. The Dow price oscillator, still above zero. NASDAQ Composite still above zero out there. So it's actually the buyers that are absolutely in control as of 110. Now, anything can change. I can't control what happens in the next moment. But I can tell you, with regard to take a look at the game so that you can make trading decisions or whatever it is that you might do with the information, that's actually the buyers that are in control of the market. Now, that's what the daily chart shows. Let's go take a look at the 10-minute charts out here. The left-hand panel, actually the 5-minute charts. The left-hand panel is the S&P futures contract. The right-hand panel is the NASDAQ. Let's look at the NASDAQ. Actually, let's do a couple of different things out here. Where did I put that NASDAQ chart? Thought I had opened up a 10-minute chart here a short time ago. I'm sure that I did, but the question is, where the Sam heck did I put it? Oh, here it is. Okay, we'll flip back in between my two charting packages out here. This one, it's a little bit easier for you to be able to identify the wave counts. It's also easier to pick up on the price relative strength divergent pattern. Now, you remember on Tuesday and Wednesday, we were using a 10-minute chart. Now, The other charts I had a 5-minute chart up. I can switch those over. But here's a 10-minute chart. You do remember on Wednesday when we called a nice bottom, moving up into yesterday's FOMC meeting, right? We used the same kind of pattern. Now, when the market got the information that Janet Yellen wasn't going to do anything, we had that spike up in the market that took the NQ. So see, where did it get that? The actual tick high was 44.4175. Things began to sell off. They continued selling off all the way into the time frame of 9:30 this morning. Now, what was taking place at 9:30 this morning? Well, from that peak to that trough, you went to a 7th wave move. You went to that letter G. You also, as you were moving lower this morning, when many people thought that the sky was falling, what we were taking a look at was price was moving down with less relative weakness. Never a good sign if you're a bear. Always a good sign if you are a bull. Again, you got to stick with the 10-minute chart, though. Now, in this case here, price moves lower, bounced up. Looks like we got 4 waves out of it. We've come down. We pulled back into this time frame right now. Again, it's a 10-minute chart, but this is going to be revealing to both you and I. We saw this little hammer candle form at 12:30. This, again, 10-minute chart. That low has held. You say, what's the low? I'm going to tell you. That price point is 43.2625. If that holds, we could have an A to B equals C to the upside. That is forming as we speak right now. If price closes below that, I would anticipate that price will get down and test that 930 low. That is the setup as we speak. How will you know if there's an A to B equals C to the upside? That is setting up. Well, one, you'd get above 43.47. That's your TAS market profile high. Secondly, you'd then get above that D point, which will be really the B point of an A to B equals CD. Sorry for the confusion there, but those of you familiar with the lightning bolt pattern, you know what I'm trying to say. 43.6275 is the number out there. That's the 10-minute chart inside of the NQ. Let's go take a look at the 10-minute chart, and we'll take a look at volumes. Let me just change this over to a 10-minute chart out here. We'll see the same thing. So when we take a look at what transpired this morning, we know that on the way down, both you and I understand the patterns that are out there because it's the same thing that you and I did on Tuesday of this week to identify at least a place where the market was going to find support. So same patterns, different day. Works on always. This is a great tool, great set of tools. Works on all time frames. You want to respect it, pay attention to it, and trade with it. Now, what we also know is that as price was bouncing, it was running right into what Tom calls this ice, right? It was coming right into the low, the intersection low at 2 o'clock, just as the minutes were being released inside the NQ. That's at the 43.57 level. That level, which by the way had a nice little volume bar of 30,000 contracts on a 10-minute basis, came down there, tested that with 17,000 as we came into the 350 time frame. So not enough volume to what? To bust it down. The level held that support until about the time frame of about 6 o'clock this morning. I actually was quite surprised that it lasted until 6 o'clock this morning, because when my eyes first opened, it was 4 o'clock in the morning, just past 4. I saw that Europe was down, but our futures were up. Trading opportunity. Because usually it doesn't work that way. And our futures, the ES mini gave way a little bit quicker than the NQ. But in this case here, look, the NQ broke through a level of support. That's now resistance. So with regard to what the market wants to do at this stage of the game, if, in fact, the NQ can clear 43.57, stay above 43.57, then you'll have an A to B equals C to the upside. Now, that's not taking out the B point, but that is a significant level of resistance that the market has to exceed. If it doesn't do that, as we just said, you'll close below a hammer candle on a 10-minute chart. You'll go run down to the lows or somewhere near the lows out here at that 42.99 level inside the NQ. Now, where's the A to B equals CD pattern take you up to? About 43.87, 44.04, probably before it runs into what would be referred to as a Gartley sell pattern. In fact, at the 43.87, that would be your ideal 0.618 Gartley sell pattern. We just have to take, if in fact price can get over that, we just simply have to watch volume, we have to watch the size of the bars, and so forth. Now, what if we go over and take a look at the 10-minute chart for the ES Mini? Let's go do that as we speak. You're going to see a similar pattern, right? Off of that spike high at 250 yesterday afternoon, all the way down to the account. Now, it didn't have a price relative strength divergent pattern. The NQ did. The NQ is arguably stronger than the ES. So now, of course, the NQ, when the market's going to get crushed and move its way down, the NQ is going to lead on the way down. So it provides you with a ton of information when you're looking at these multiple time frames out here, when it's moving down with light volume out there. You know, if the thing that's really going to crush the markets is telling you, hey, I got weak hands right now, that is an important message. So you've got that seventh wave move to the downside. We may have an A to B equals CD that's unfolding inside to the upside on that A to B equals CD inside of the ES Mini. How will you know? Well, if we take a look at the ES Mini out here, what we'll see is, broke through that level of support this morning, came down and made that seventh wave. And the key level there's really two key levels to be watching inside the ES Mini. Resistance moving up to the upside, which it was unable to do. The NQ was able to do it. Shows you how much stronger the NQ is versus the ES. Is 1973 and a quarter. But I will tell you, and it's not even that swing point low that came in at about, 1944. It's really 1954. You're trading 1955.50. If the ES Mini closes below 1954 on its contract close, not the 4 o'clock close, which, by the way, the trading hours inside the contracts for the indices out here, they are being adjusted on the 21st. I believe the 21st is the day by 15 minutes. So that's something that, folks will want to pay attention to. But in any event, if it closes below 1954, I would certainly not want to be long the market going into the weekend, because that's a level of support that when you see it close below it can turn into a nasty tidal wave, a huge hurricane, a F5 twister, you name it. It's not a good scene out there. Likewise, if it holds, it all depends on where price moves up to, but a important level of support it'll be just simply matching what the summation index price oscillators are telling us by being above zero, that we're probably going to see a bounce next week. That would be its message. So 1954 is the key level. Heck, if it can close above 1973, then it says the move to the downside isn't yet ready to occur. And that's right, I said isn't yet ready, because there will be one. It just says it isn't yet ready. So now we take a look at a daily, our price oscillator summation index, then we went into the 10-minute charts out here. So what we're doing, we've only got a few minutes left, not even a few minutes, we got a few seconds left. We'll go take the longer term. Actually, what we'll first do when we come back, we're going to go take a look at gold, which is up $19.70 as we speak right now. But what you and I are going to want to do is pick this apart. At least I want to do that. So that means that you've got to come along for the ride. And we're going to go take a look. The last time we had any volume inside of gold was this morning at, move away from me, at between 8:30 and 8:40. A decent move, 7,400 contracts out there. That says it's really important for gold to close above 1135. And we'll give it a little bit more room. It's important that it closes above 1132. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to that break, we were just beginning to take a look at Goldilocks. So let's take a look at it. Let's put up the, let me switch over to it. Let's go ahead and take a look at the chart. It's trading out at 1136.80. Now, we want to take a look at, screens around the world. They're looking at the same thing that you and I are, which is that descending trend line. That's coming off of the high out here from January 22nd. Your next touch point is the May 18th. And your third touch point out here is August 24th. Talk about anchoring a nice trend line out there. You've got it right here. Now, where does that trend line hit from a price standpoint today? It would be about 1153. So it's in that 1150 range or so. Hasn't gotten up there. We've seen some nice volume. We've seen some nice movement off of the bottom. If we take a look at our TAS market profiles, this looks positive, meaning that price is both above a weekly profile and a daily profile old resistance line. That says, and I gave you a price point out there, let's just call it that it's really important for gold to close above 1126.90 today. The weekly profile high is 1125.10. So let's even be a little bit more aggressive. We'll call it 1125.10. If gold can stay above that, that would suggest to you and I that gold will go ahead and take another run for that trend line. No idea whether we'll break it or not. Nobody knows whether it'll break it or not, but if it does, then everybody around the world that's following gold will recognize that, and you'll see an initiation of orders that will go ahead and jack the price of jack the price of gold up to at least 1170, more likely in the 1200-ish range. But you got to take things one moment at a time. Now, as we go dive down into the 10-minute charts here for gold, you're going to see at the release of the Fed minutes, gold took off again to the upside yesterday. We saw some big volume moves inside of gold. There were 12,000 contracts in the first 10 minutes. Second 10 minutes had 12,000 contracts as well. So the top of that level, and that's what we'll do. We'll go ahead and put a line, a little yellow line across the top of that volume bar. That takes you to 1131. So remember, we were using levels of like 1126, 1125. 1131.20 would simply be coming back to a level where gold had broken out, or at least the top of where gold had broken out. The actual most recent breakout was really right around the 1115 range. But if you're long gold and you're long the mining equities, you don't want to take that kind of heat, most likely. That's why you're going to pay attention to that 1126 area out here. Now, we can see that there was also another little sign of strength or buying, little surge, 7,400 contracts, and that was at began at about 8:30 this morning out here. So far, so good. No real selling to the downside, with the exception of maybe at 1020. You saw 4,700 contracts as price was moving lower out there. So that's what's going on inside of the gold contract as we take a look at it both from a daily standpoint as well as a intraday 10-minute standpoint out here. If we take a look at gold priced in euros out here, let me see if I can do this for us. And for us, what I mean is... let me do this, and that. There we go. Now what we're taking a look at is gold priced in euros. What you can see, what I can see with those that are really tracking gold, what I believe, is just my hypothesis. What I really believe is that gold priced in euros is going to be the first initiation wave if, in fact, gold can get up over that level. So we're really trying to put this together. That's why we're paying attention to the volume and taking a look at the gold contract priced in dollars. And we're taking a look at what can gold actually do in relationship to that trend line priced in euros. We saw the pop this morning, got up, and it's really not that far off. It's trading at 1,000 euros per ounce. It got up to 1,002. That wasn't high enough to really test the top of that trend line, or at least that doesn't look like. It's close. And it may be a cigar. It may not be a cigar. It hasn't backed off, so that's a positive. But if, in fact, we can see gold priced in euros clear that area, and you would say, well, Steve-O, what's that price point? I'd have to say it's probably about 1,005 euros, so we're not that far away. But if it can close above that, there will be trading screens around the globe that recognize that. And that could set off a set of orders. That could be short covering. Who knows? Well, if you see some volume coming in, we'll know that it's some buying. Well, we won't know really. Why did I even say that? We really won't know what it is. What we will know, though, is that people will recognize that levels of resistance have been breached. And therefore, that can create buying as well as short covering. So it's not there yet. It's close. It's really close. And I doubt that it's going to happen within the next 31 minutes. But Sunday night, that could be a whole different scenario out there. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 240. S&P is down 24. You know, let's do this. We've got 4 hours underneath our belt in the trading session. Let's go check in on the ETF structures and see what they're doing. Let's start off so we took a look at the NQ, right? And we know what to pay attention to. Well, the 10-minute chart actually has gone by. Let's go see. Did we get a close below that hammer candle out here? We did not. We did not. We're testing it again. That was the price point of, well, what was that price point? Just so we know what to pay attention to. That was the price point of 43.3250. We're trading just below it right now, but it was tested and rejected. Okay, let's go back to the Qs and the ETF structures. So let's go take a look at those. The Qs right now, they're trading out at about 105.60, 105.68. Now, we've done about 27 million shares in the first 4 hours of trading. Straight line math says that that's a volume equivalent of 45 million shares. The Qs yesterday made a higher high with 56 million. So he made a higher high with 56, pulling back today with about 45 million shares. So in essence, a version of a light pullback. However, it is really important for the Qs to get back above the 106 level. Actually, I'm going to change my mind on that. No, I'm not going to change my mind. I'm not going to change my mind at all. You see, at 106, it's a natural area of resistance. It matches the swing low from May 6th. It was that touch point out there from July 7th. So a key level to be watching is 106. Now, what the Qs have not done, unlike what the DAX has done, the Qs have not finished back inside there. They're far away. They're not far away. They are ways away from the August 24th swing point high, which is priced out at 102.53. So at this stage here, we know the Qs yesterday ran into resistance at the point of control for both the daily and the weekly. Today's volume is light volume compared to yesterday's move higher. That's what the Qs are doing. If we go take a look at the IWM. The IWM through this point, 4 hours of trading, about 23 million shares. That says we should do about 37. Straight line yesterday making a high with 50 million. 50 pulling back with 37 million, trading into 27 and 26. So, it's pulling back into a little bit higher volume out there. The key level inside the IWM is going to be that swing point from August 24th. As long as it stays above 114.92, as long as the ES stays above 1954, as long as the price oscillators remain above zero, says this market can continue to bounce higher. It may not be today, but come Monday or sometime next week. That's the message of the IWM. The SPYs right now, volume of 113 million, straight line that says about 183. The SPYs now are testing, so we'll probably get better piece of information out of the SPYs because the SPYs are testing the top of the August 24th swing point. Now, that swing point has 507 million. I said what we're going to do today, it's not that I said, if we just do straight line math, it says that it will do about 183 million shares. If the SPYs reject, and that means by reject, I mean close above 195.84 or 196.07, you'll have a failure on price and volume at the August 24th swing point. You'll have that. You'll have price making a higher high with 276 million versus a pullback with 183 million today. So the SPYs are probably the real key level, maybe the diamonds too, but the SPYs are going to be key for us to watch. If you close inside 195.84, doesn't matter to me if it's on light volume or not. It says you can get down and you can test the bottom of that swing point. So the SPYs actually looking a little bit like the DAX, although the DAX is much further into its August 24th or 25th swing point out there. If we look at the Dow Diamonds have done 6 million shares. The first 4 hours of trading, about 6.5. Says you're going to do maybe about 10.5. Now, the Diamonds have not made it back to the swing point. The key number to be watching for inside of the Dow Diamonds, 163.45. So at 163.45, if you can get down there, we have not gotten down there. There's volume of 35 million. You're pulling back with about 10, 11 million. If it tests 163.45, rejects it, closes over it, you'll have two of our ETF structures that will have failed on price and volume and a key swing point out there. The SPYs look like to be that's the name of the game for us to watch and pay attention to. Now, we could get some pressure on the markets, and then it would be the SPYs and the Diamonds to be focused on. So that's what's going on there. I see we've got some requests inside of the Tiger's Den. First request says crude oil Steve. So crude oil Steve, I've got the October contract. Let me see. Yeah, volume wise, looks like that is the active contract here inside of light sweet crude. So we're trading at 45.14. What does this look like to me? If we take a look at light sweet crude, let's do this and just kind of explode it up on our screen just a little bit. Let's see if we can do that. Can I do that? Can't really explode it much more than that for the moment. So here's what we know about light sweet crude. Let's go ahead and get rid of the retracements as we speak. So light sweet crude comes off of the bottom back here, August 24th, makes a high, runs right into resistance of its weekly market profile at 48.71. Quite frankly, it closed above it just slightly. That's the weekly profile. It didn't close above it for the week, but it closed above it for the day, and that area acted as resistance. So significant resistance inside of light sweet crude is going to be 48.71. If it can remain clear and close above the high of 49.33, you'd have an A to B equals CD to the upside. That's what the daily chart shows. What light sweet crude is also doing is pulling back and finding support at its point of control, its TAS point of control level, those little dotted lines on my screen. So it says that there's support inside of light sweet crude at about 43.23. You're not down there just yet. If light sweet crude continues to pull back, the area where you'd be looking to get long, if that's the question, you'd be looking to get long somewhere around that 43.23, assuming that you're coming back with light volume out there. If it cracks that level, what you're likely to see is a test of the swing point from back on August 24th. We were just talking about the August 24th swing point, and that would say to me that light sweet crude would run down to test the high of 40.47 before it released the next piece of information. Light sweet crude is doing nothing more than trading in a sideways band, and that band in essence is from the price point of about 43.25 to 48.71. That's all that it's doing. Gets a lot of news and so forth, but that's all that it's really doing. At least that's all that I see that it's doing out there. I hope that that helps you, Danny, in Atlanta. Paul S wants me to take a look at ITCI. So let's go take a look at ITCI. I don't, symbol doesn't, intracellular therapies out here. Now, not a lot of volume on this equity. That's the very first thing that pops up on my screen out here is there has not. Now, when I say not a lot of volume, let's put this in perspective. On average, it does about 300,000 shares. However, they must have cured something. Paul, what did they cure out here? What happened on the trading session of September the 16th? Because on September the 16th, 13.8 million shares. I'm assuming that this was not any kind of buyout, but that would be a bad assumption. But maybe, Paul, you can just type in here, just out of curiosity, what in the heck they did. Because this thing moved higher, big volume, right? You're talking about 400,000 shares, then all of a sudden 13.8 million shares. You know, it could be several times the float for all that I know out here. It's trading right now at 55.95. We've got to put this thing back on a longer-term scale to get some type of feel as to what it may be doing. Oh, well, we can't. Looks like this is an IPO from back in 2014. This looks the opposite of probably if we turned on Alibaba. This thing looked like it opened, the IPO must have opened somewhere around 10 bucks, got down to a low of 10 bucks, and is trading at 55.81. When we take a look at this chart out here, I'm not sure what the question is, but I've got no idea where the heck that this thing is moving to. No reason for me to really look at minute charts, but I'll do that for you just for giggles. I'll put a 10-minute chart out here. If you're looking to buy into it, if that's the question, oh, man, who the heck knows? You know, I don't know if that's really the question out here. Now, we're not seeing a ton of volume, you know, on a 10-minute chart out here, but a little rocket ship like this, boy, who knows? I don't even know what it is that they did or what they do out there, but sorry that I can't be of any more assistance really to you on this. About the most assistance I could be would be this thing might be a, you know, if it comes back to the breakout area, you've just got to watch it because the breakout area that you'd first be looking at is 42.02, and if it closes below 42.02, something's wrong, and it's going to head to 25 bucks. I'm not saying that's going to happen, but that's part of the problem when you have something like this that just absolutely took off to the moon. So we took care of crude oil, we took care of intracellular therapies out there, and then the next request from Tammy in Reno is let's go to the sake bar. So I'm all for that. So folks, have a great Friday. Oh, I'm just kidding. We can't really do that. Is there anything else out here? No, nothing else that I see. Looking to day trade, it's short. Oh, so that was on, looking to day trade, this intracellular therapy short? Oh, go trade light sweet crude short or something else, but not this with that kind of volume breakout here. Is I think what I would be saying out there. Yeah, I don't. I apologize, Paul, but I don't see that. I would look for something else. I would go to my TAS market profiles and look for things below the weekly and the daily boxes or something like that. This thing is above everything, so I just don't see that. I think you're playing with nitroglycerin. In doing something like that. So hopefully that helps. Cyber for a long. Okay, let's go take a look at Cyber for a long. SCYBR is the ticker symbol. So let's go take a look at it. Okay, now this is a interesting equity. CyberArk software. Now, what this thing did was it broke out, and the actual breakout on this took place on the trading day of February 12, 2015. The breakout volume was 7.1 million shares. And on August 24th, it pulled back with 3.4 million shares. So the scary day, this thing pulled back into a breakout area with light volume. Now, the breakout area, if you're watching this on TigerTV, I'm just really looking at the range. When something breaks out with a wide-ranging bar or a gap like that, the breakout area is going to be several different spots. Typically, you like to see maybe a few bars below the actual candle that it broke out from. You look for the lightest volume. So I would say the lightest volume, as we come back and we take a look at it here, says that the lightest volume was on the trading day of February 9th. So, it pulled back into that level. Right now, it is really trading at the area where it originally broke out from. Now, this thing has got some resistance here. So somebody's looking for a long trade on this. And this has got resistance at this little gap down with volume of about 2.8 million shares out there. Not a big deal, but it's enough of a deal out here that says, you've got to be, if you're looking for your reward to risk on this, you've got to anticipate that this is going to find resistance at about $53 out here. If you're looking to, I don't know how this trades in relationship to the actual general market out here, we'd have to put a chart on. And I don't know that we're really going to be able to determine that because this is an IPO from September 24, 2014. So we're not going to really get a lot of data on that. I would say that you're best off trading this in the direction of the market. The good news is it's pulled back on light volume. Is there anything else out here candle-wise that we can pay attention to? Not really. And on that August 24th day, the problem is, much like you and I looked at the SPYs and potentially the diamonds, is that this is trading into the August 24th level. And as we take a look at that price point, the top of that is 41.92 and the low is 40.63. So I will go with 40.63 would really be your buy point on this, on CyberArk software. So hopefully that helps Danny in Atlanta as well. I think I got to all the questions, but if there's more, just fire them on off in there. What do we want to take a look at? I did say some long-term stuff out here. Oh, I've got Vince on the phone from Sacramento. My apology, Vince. Thanks for calling. Thanks for holding. How you doing this afternoon?
I'm doing well. Thanks, Steve. How about yourself?
Doing well. Thank you very much. And my apology for not seeing your name on the call list out here. But you're calling about the XIV. Tell me what you're doing and how I can help you.
Well, I'm currently in the position as of now, and my target is I want to try to hit 34 before this next big pullback.
Okay. So this is the inverse. Velocity shares daily inverse for the VIX index. Is that correct?
Correct, yes.
Okay. So what I'm going to do is now the XIV, probably if it's well, let me just see here if I can. Do you know what this actually, just out of curiosity, because I don't know. I wish I did off the top of my head. Do you know what this is actually trading off of? Is this?
Yes, it trades off for the first 2 months of the contract.
That does. Okay.
Yes, it's basically the opposite of the VXX.
Got it. Okay. So let's go take a look at what we've got going on inside of. So right now you'll be looking at the October and the November contracts for the VIX. And I'm sure it's weighted more towards one or the other. Usually it's the front contract that it's weighted towards. But let's go take a look at that future contract. Why isn't it popping up on my screen? Here we go. It is. And let's go see what that is actually doing out here. So yesterday, that, you know what we're going to have to do, Vince? Can you hold on through this break?
Yes, yes.
Okay, we're going to a hard break. Then we'll come back and we will analyze the trade that Vince is in, XIV. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 280 right now. S&P's down 28 points. Composites off 61. We're going back out to Sacramento, California. We're speaking with Vince, who is in the XIV trade. So, Vince, here's what I would say. Here's what you really would be looking for, today as an example. So, and that is this: if I take a look at the VIX index itself. and we take a look at what it did yesterday. It did yesterday what it was supposed to, which was get down and test both 2060 and 1879. If this had closed below 1879, I would tell you were going to have a field day with this trade because the actual cash fix index would probably go down to about the 1146. But that's not what happened. What happened is those two levels that it should have tested, as it did, held as support. And right now, just in the VIX cash indice, you really need to see this thing close below 2060 in order for you to be safe out there. And I'm looking at the 50-day exponential moving average on that. If we go take a look at the two front-running contract months out here, and that is the first one is October. The price point on that you want to see this, I'm assuming the XIV is probably, 50 to 80% weighted on that contract. I didn't get a chance to look that up, but you really need to see this close below 1982 today, that contract. If you do that, then if you do that, it's a 2090. If you do, that's in order, because right now what it's done, it's come back and it's tested an area of support. You wanted to see that level get broken, and it hasn't. And when a level gets tested and it holds, it's something that we just simply have to pay attention to. So with something that has so much volatility, first it's a volatility trade, and it has so much volatility, I don't want to see it get caught on the wrong side of that trade out there, especially if you're kind of like at a break even or maybe small profit. On the next contract out there, you're looking for this to close below 1971 and set $20.35. Now, these vehicles are extremely explosive. You probably don't need to make your decision until the end of the trading day, towards about the 4 o'clock time frame out there. But if it were me, were my money at risk inside that trade, that's what I would be looking for. And I would, if you're close to a break even or so, I would, even if you're not, look, you got to manage a trade based on the information that is providing to you. I would consider jettisoning out of that trade, and maybe, because it's a daily trading vehicle, maybe taking a look at getting back in it, on Monday if things were to, if prices were start to get below those levels out there. Does that help you, or tell me what I'm missing, that you're looking at, because I've only looked at it briefly.
Yes, it helped. I'm just hoping, today it did a death cross, so the 50 went over the 200-day moving average, and I was hoping the XIB can maybe creep up to around 33 to 34 range. I was hoping to see the stock market bounce today, and I don't know, the way it's going, it doesn't look like it's going to.
Yeah, I haven't studied, I will say this, I haven't studied the death cross or the golden cross on the VIX index. I think there's some other tools, so I don't know enough to tell you whether that behavior is similar to what you might look at on an indice or something like that. But I'm comfortable with what I just shared with you, that yesterday we saw the VIX cash index move down and test levels that, my newsletter I've been covering and telling folks where it was headed to, and yesterday it held as support, and that's never really a good thing. So you really need to see a breakdown of that area. I wish I had more time, but we're about to, the show's just about to come to an end. So good luck to you, Vince, and thanks so much for calling, and look forward to speaking to you soon. Folks, stay tuned. David White is up next. Have a fabulous weekend. Make sure you keep your seatbelts on when you're driving in this market. Take care, folks, and see you Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.